There are two essential market forces that you need to know.
Whether you're conservative, whether you're moderate or aggressive, it's important to have a mix of these asset classes. Say that it's a thali system.
What do you think is the best asset allocation strategy?
For wealth creation, I would say,
If mutual funds had a sense of humor, what jokes would they tell?
why did the index fund break away from the mutual funds?
Hi everyone, welcome to another episode of Cashvisory's podcast. I'm Utkarsh, the co-founder, and we are trying to solve personal finance for all young people. Our mission is to get every single young investor to their first investment. We have a very special guest here today. We have Mr. Hari. You know, he's a man of many talents. He's actually an MBA, CFP, CWM, and many other certifications, which Hari will be talking about very soon. And currently, he's working as the segment head L&D at Axis Mutual Fund. He's a learner, an author, a trainer, and also a motivational speaker. So Hari, pleasure to have you on our show today. Welcome.
Thank you so much, Utkarsh. Thanks for having me.
So Hari, let's get into all those amazing certifications and educations that you've done over the years. So first of all, I'm very intrigued that you did an MBA, then a CFP, then a CWM. Was finance a career that you were always interested in?
Absolutely not. In fact, after doing my MBA, I joined the pharmaceutical industry.
Oh, interesting.
I worked as a medical representative, then went out to become an area sales manager, taking care of a couple of locations and area. 2007, is when I got a call from one of the financial service companies, and a reputed one at that. I was in sales in pharma,
Right.
and I got a call which was for the branch manager opening. I said, sales यहाँ करे कि वहाँ करे कोई फर्क नहीं पड़ता है.
Right.
So let me give it a chance. So I joined that company in 2007 June as a branch manager. As luck would have it, after 6 months the market crashed.
Right. Wow.
I would not say it was planned. It was maybe accidental that I
Right.
came into finance. I'm a science graduate and an MBA in marketing.
Right.
Absolutely no connection with finance. But that's how destiny is, Utkarsh. Sometimes
Absolutely.
you will end up into things, which you never planned out for. So that's how I came into the industry in 2007.
Right. Oh, that's pretty amazing. And you know what you said, where life takes you, no one knows.
Absolutely.
Even for me, I'm an engineer, right? And then I found my way to personal finance, invariably just out of interest. Became a financial advisor, and look at what I'm doing right now,
Yes.
right? So life is always unpredictable, and very interesting to see the journey that you've had so far. So tell me more about the certification that you ended up doing later. Was it a requirement of your job that you needed to do a CFP, CWM, or is it something that you pursued out of interest?
Okay. Again, very interesting, Utkarsh. As I said, I joined in 2007. I came from the pharma industry.
Right.
My cluster manager came from the FMCG industry. And both of us were absolutely new to finance. Knew nothing about finance, nothing about mutual funds.
Right.
And he said one day, Hari, if we have to be successful in this industry, I think we need to do some certifications which can help us grow in this career.
Right.
Because MBA, everybody is MBA there. So how do you differentiate yourself is the sentence that he used.
Right.
And both of us, were very excited. We went and enrolled for this CFP course, which is the Certified Financial Planning course. And for 1 year, I did nothing. I didn't
Right.
prepare anything. Then all of a sudden, in the month of April 2009, April typically is a month where you have a lot of holidays,
Right.
So one day I decided, इतने books पढ़े हुए हैं, एक बार पढ़ के देख लेते हैं. And that's how it started. And I said, let me, so the various modules in CFP, so I started with insurance.
Right.
And I said that इसको exam देखेंगे पास हो गया तो आगे पढ़ेंगे वरना छोड़ देंगे. May I gave the examination, fortunately I just passed.
Right.
But
Amazing.
that gave me a lot of motivation, Utkarsh, to continue this.
Right.
And you will be surprised, in a matter of next 6 months, I completed the entire certification.
Oh, that's pretty incredible.
Yeah.
I know most people take like 1 to 2 years at least. to do.
Absolutely. In fact, a lot of people don't even attempt, they just enroll, pay the fees and don't clear it.
Right.
So fortunately for me, things worked out. And I think it sort of helped me to gain if not a major advantage, but a slight edge over a lot of my colleagues, because I was then fascinated by this entire concept of personal finance,
Right.
having done this CFP course. And then I said that let me move from sales to something where I can sort of help investors, achieve their financial goals.
Right.
And within the organization itself, I went on into the roles of an investment counselor, which we used to call it as a regional product manager those days.
Right.
And responsible for driving the business for mutual fund, PMS,
Right.
across Mumbai. So, and then of course in 2018, 19, I said CFP to abhi common ho gaya hai. Let me try and do something else. Because at that point in time, I was into training. And when you are into training, a lot of these certifications add a lot of value to you.
Right.
So I said, what's the other option available? I wanted to pursue CFA,
Right.
But I got scared because I did my CFP when my daughter was born.
Right.
I said, इसके आगे मेरी हिम्मत नहीं बन रही पढ़ने की. And it's typically a 1.5 to 2 year course, CFA, assuming that you clear all the levels at one shot. I said, वो नहीं हो सकता. So I left that. Then CWM came up. I said, let me try and do something from portfolio management and an advisory kind of certification. I think that is where CWM came in.
Right.
I think both of these certifications have sort of helped me bring that added edge, when people come and listen to us, as speakers. I think that sort of adds value to the conversation and also.
Right. Absolutely. No, that's very interesting. And just for the sake of our audiences, CWM stands for Chartered Wealth Manager. Right. So very interesting, Hari, and your journey has been pretty interesting when it comes to continuously learning and upskilling.
Absolutely.
I think that's a common theme and trend that I see, which I really resonate with. Right. We should continue to be the best version of ourselves.
Absolutely.
So you've been a learner yourself.
Yeah.
But what got you from learning yourself to getting into training?
So again, if I go back to this organization where I started in financial services in 2007, I actually had a very huge stint, about 8.5 years in this organization. And fortunately, the organization gave me a lot of opportunities to explore myself,
right,
moving across different segments and departments. And while I was in this investment counselor kind of role, I realized that, I had to deal with 170 relationship managers.
Wow.
And everybody used to call me for joint calls. And it was practically impossible. You can imagine everybody wants a sales call to be done on a Saturday.
Right.
It's impossible, covering the length and breadth of Mumbai in one single day. That's when I realized that I need to sort of train my relationship managers on these products.
Right.
So that is where I started training them. And when I started training, I realized, hey, this is perhaps what I would love to do. Even though I was enjoying sales and enjoying the role of an investment counselor, but this, you call this inner calling, that yehi karna hai aapko life mein.
Right.
And I think that is what sort of started my journey. In the same organization, I went on to get into the role of a trainer.
Right.
And then I moved into the asset management in 2016.
Right.
So 16 onwards, I have been into the asset management training.
Okay. That's really cool. And again, something that happened accidentally for you.
Yes.
Right. But then what was that one thing about training that, gives you the most amount of satisfaction?
Couple of things, Utkarsh. One is that you get to meet a lot of people.
Right.
So in my that financial organization, I was dealing with employee training.
Right.
Asset management gave me a very different perspective. I was looking after sub-brokers, and distributor partners. So
right.
A completely different set of audience, different set of mindset. And you are now dealing with people who are in the industry for many years,
right.
and to actually go and coach and train them is a tough task. So you need to be up the curve in terms of, handling them, and their queries.
Right.
So that gave me a very different experience altogether. But I thoroughly enjoyed it, moving from employee to sub-broker kind of training.
Right.
And that's what I've been now continuing for the last 8 years now.
That's super interesting. And, I think it kind of sort of trickles down to helping the end consumer.
Absolutely.
Because if the salespeople, if your relationship managers know these products much better,
correct,
then they'll be able to advise you so much better. So that's something that's pretty noble that you're doing. And that's again something that we can relate to, because our real focus is to educate every single person out there, right? To be able to make financially savvy decisions
right,
for themselves, and even understand the recommendations that are coming from their relationship managers. So that's really interesting, and I think this will improve the overall skills and quality of advice that we get in this country.
Absolutely.
So just elaborating on this particular point, what are your thoughts on the state of financial literacy in India as the country at the moment, in the current day and age?
I think it's a very interesting question, Utkarsh, because if you look at from independence, our overall literacy rates have gone up tremendously. But the financial literacy rates are very poor. I was reading some report, which said that the financial literacy rate is as low as 27%. That's too low for the population.
Absolutely.
And this becomes more important and relevant, especially when people are talking of India as the next sort of superpower.
Yeah.
You know, in terms of economy, everybody's talking of the 5 trillion and the 7 trillion and the 10 trillion economy. I think if our individuals and investors themselves, are not up the curve, I think that journey is only going to become tougher and tougher.
True
So
that.
from that perspective, I think it's very important to know financial literacy is very important. And to that extent, I think some of these institutions have taken initiative. RBI, for example, does something called as Literacy Finance Week. They do it once in a year.
Yeah.
They talk about all the banking products, do's and don'ts, all those frauds and so on. Also, basically, they are trying to educate a common man about the entire financial service industry.
Right. And you mentioned about frauds, right? Now that is something that's super critical because
Yes.
they're getting so very sophisticated. So it's becoming harder and harder for people if they're not educated about these things to be able to protect themselves.
Correct.
Right. And also on the financial sort of literacy side in general, right? I think that people have started coming into the financial services sector so much more.
Correct.
In urban India and rural India, and thanks to initiatives like UPI.
Yes.
Like almost everyone, there's no place where people are accepting cash right now.
Absolutely.
In places like Bangalore, so it's even more important in the current day and age. So tell me more about some of the initiatives that you guys are taking at your end to kind of help the end consumer become more literate.
So what we do and now making a statement as a asset management company, general speaking. So SEBI has asked us to adopt, districts.
Right.
So all asset management companies are supposed to adopt districts where you do investor awareness programs.
Nice.
You educate investors on financial planning, on mutual fund and investments in general. So that's what we have also been doing. Apart from that, we do a lot of webinars,
Right.
online sessions, for our investors, existing investors. Also, we tie up with a lot of our existing sub-brokers or partners or distributors who sell our mutual fund.
Right.
And they arrange certain investors programs, where they invite a lot of fresh investors who are wanting to get into mutual fund space. So we go and address them. So these are some of the initiatives that are taken. Obviously, with technology, I think, as you rightly said, UPI has been a huge success in India.
Right.
And I think digital is going to sort of help us leverage this technology to reach out to a larger section of the population in terms of educating.
Right.
I think there are a few trends that could emerge in the future. One is, of course, as the digital adoption goes up, you'll find a lot of apps, which would actually cater only to education. Maybe with artificial intelligence, and you might have seen virtual reality now. I think that is one space which I think is untapped. I'm not too sure if somebody has tapped it, but I think that's an exciting space where people can actually sort of just go through the entire events, in their personal life, through virtual reality kind of this thing, which will help them sort of plan for their finances, very well.
Right. And like, all amazing points. And just to sort of build on that, I think the biggest roadblock that we have seen to mass sort of adoption of financial literacy and getting literate has been, one is it's not something that's part of our schooling system.
Yeah.
Right. And people still associate finance as a very boring topic. So what we do at our end is our focus is completely to make finance interesting by using a lot of the tools that you in fact talked about, right? So we are building a lot of these digital bite-sized journeys,
Wonderful.
which are educational plus advisory focused journeys, which are completely gamified.
Wow.
So initiatives like those, I think, will become super critical.
Absolutely.
And even the sessions that we conduct for our sort of clients, our investors, a lot of them use a lot of pop culture references, games, right, to make things interesting. So I think a lot more has to happen here. Definitely just a drop in the ocean. But I think as we continue to collaborate and build on these initiatives, I think the winner is going to be India at the end of the day.
Yes.
So, but amazing to hear some of the things that you've been doing. In your opinion, though, what do you see as, where do you see India heading from a financial literacy standpoint in the next 5 to 10 years?
Difficult to put some numbers, but I think we should at least double from here on in the next 10 to 15 years. That's super critical for all of us, as part of the ecosystem, that a lot of investors start knowing. So now the difference is that when you talk of literacy, Utkarsh, people might know that there's a mutual fund, there's an insurance.
Right.
But do they actually understand the intricacies of the product, and which product is best suited? I would rather call literacy as being able to identify and say that this is the right product for me.
Absolutely.
Because today, because of so much of media, social media, everybody is perhaps aware of so many things, but do they really understand how it works? I think that's very important. That is why the initiative that you have taken in terms of gamifying, I think that will help connect with the audience and also keep them engaged. Because typically the other issue that we face is that the attention spans have come down.
Absolutely.
So if somebody were to create a 10-minute, 15-minute kind of video, I think none of us would be interested. So I think that bit-sized, and more gamified versions, like what you have as Instagram Reels, those 1 minute shorts, I think that's going to be super critical, and we are also internally in our own organization trying to develop some of these for our own employees.
Right.
I think that's going to be the way, you can sort of ensure that a larger section of the population gets educated on finance.
Right. And I totally agree with the point that you mentioned, that true literacy is when someone can really understand whether this product is right for me or wrong for me.
Yes.
So we continue to ask a lot of our investors कि mutual fund सही तो है, आपने सुन लिया TV पे, but होते क्या है?
Correct.
Right? So I think we want people to question. Even when we give our sort of clients advice, I tell them actively, ask us. Try and understand what is the sort of rationale behind these recommendations. Only then will you become successful with your money management over a period of time.
Correct.
Right. So I think all amazing initiatives, and good to hear that you're doing this again for your employees, because it trickles down from there to the quality of products that come to the end consumer.
Yes.
But I understand that you do a lot on an individual level as well. You're a finance blogger.
Yes.
You're a published author.
Yes.
Right. So tell me, what got you interested to get into those fields?
Again, by chance. I wrote a couple of articles in my first stint, when I started the journey in financial services. I keep going back to that company because that sort of set the foundation for my career in this industry.
Right.
Couple of articles, and they had this monthly magazine which would go to 25 lakh investors.
Oh, wow.
And people liked those articles, they appreciated, and that sort of gave me that feeling that, okay, I'm not that bad. I can keep trying and exploring it. But I had to wait till 2000 and maybe 18, 19 to get it going on a larger scale.
Right.
That's when I started writing blogs.
Nice.
And again, couple of blogs got a lot of appreciation. People said, why don't you try writing a book?
Wow.
And that sort of got me interested, and I said, let's start writing a book.
Very
And
interesting.
again, just I talked about the CFP stuff, it just happened just like that. In the month of June 2019, to be precise, I had taken a 7-day block leave.
Right.
And I started writing.
Oh, wow. Amazing.
I said, let me attempt, जितना होता है लिखते जाएंगे, बाद में देखते हैं output कैसे निकलता है.
Right.
But fortunately, again, it worked out. And that's how the book finally got published in the month of December 2019.
Nice.
So I keep continuing to write. I don't write blogs so much these days, but I keep posting on LinkedIn.
Right.
Many content, and my objective is try to connect it with topical events, and
Right.
try and connect investments with those.
Absolutely.
Is what I consciously try and do.
So to basically bring relatability into the fold. No, and as you said, previously attention spans are dropping.
Yes.
So I see the transition from blogs to LinkedIn makes complete sense,
Yeah.
right? Shorter form content, easier for people
Correct.
to consume. But I'm very intrigued about your book. If I'm not wrong, it's called Muni.
Absolutely.
Right? And I love the play on the whole Rishi Muni and Muni thing, because what Rishi Muni basically used to do is help you with your spiritual freedom.
Correct.
And in your book, we talk about financial freedom, which is I think an amazing wordplay.
Right.
So tell me more about what that book is all about and what it covers.
Yeah. So it's a book which has 43 stories, and I've not say I've created stories, but I've used stories to drive home the point, about certain important concepts of investments and personal finance.
Very interesting.
Again, story, because I think that's very relatable. And India is a land of stories, right?
Absolutely.
And I think it's one of the easiest way to connect with
Right.
the audience.
Agreed.
Keep them engaged, right? Because stuff to bahut hai, content bahut hai duniya ke paas, but the way you put it across, I think it's very important. And
Right.
stories sort of help us to sort of de-jargonize, many complex financial, words, into simple ones,
Right.
So I think that is where that entire journey started. Conscious effort to link a story with the investment theme.
Right.
And of course, the search goes in terms of how do you identify which story fits. That
Absolutely.
particular theme. So that took time. And of course, there are copyright issues around stories also, so you have to be careful.
Oh, yeah,
so,
of course.
so there's a lot of editing that was done, the personifications, etc., to be done to
Right.
get that. But the underlying concept was to create it in a way that becomes more engaging for the audience.
Very, very interesting. And you know, covering investment strategies, covering financial concepts through stories is very, very powerful. So tell me, like, out of all the concepts that you've covered in the book, what is your favorite investment strategy that you talk about?
A couple of them. My book generally revolves more on behavioral finance.
Right.
That's a topic, Utkarsh, again, is very important because all the other stuff is okay.
Yeah.
People know about it, but behavior is something which is internal.
True.
And I think that becomes very, very critical from an investor standpoint. So I've tried to create a lot of investor biases in those books, using again stories, but driving home the point that behavior becomes very, very critical.
Right, right, and that's pretty amazing. And you talked about biases, and these are biases which all of us have, but we don't realize.
Yes.
Like, for example, loss aversion.
Correct.
I think it's something that all of us have, and you know, we don't realize, but it's important to be cognizant of them so that we make lesser mistakes as investors. So also pretty amazing. Now let's say if we talk about the behavior side of things, and in terms of how do you think about money. Especially for a young person that's just getting started, that's just out of college. What would be the two or three most important sort of mindset things that you would tell someone young like that?
I think one, be patient. Okay, start early. I think that's very critical.
Yeah.
Something which I could not do in my personal life. You know, when I started my career, my father said, do a PPF and take a life insurance policy. That's typically how the system works in India. I came into the mutual fund quite late. Only when I joined this industry, I knew what is a mutual fund.
Right.
So you could imagine I lost the entire bull rally from 2004 to 2007 sort of.
Right.
I think from that perspective, I think because knowledge is no longer an issue, information is no longer an issue these days. Therefore, start early with whatever amount you have. Don't worry about the amount.
Yeah.
You can obviously keep adding it up later in the future, but start early and work on your emotional being. I think that's very, very critical.
Right.
Easier said than done, because at the end of the day, all of us are human beings. But
Correct.
if somebody can sort of really work on it, they can become super successful in investing.
Right, right. And again, very sort of important points that you talked about, which is, you know, kind of don't think of it as a short-term game.
Yes.
There's so many get-rich-quick schemes on the internet which are so attractive.
Yes.
But something that is quick will not be long-term, right? It might give you return one time, but it's going to go horribly wrong in the long run. So from that perspective, with so many different sort of asset classes that have come into the fold in the country,
Yes.
with things like crypto, unorganized lending, and whatnot, what would you say you would, in terms of your recommendation, for the first product that someone young and new should explore for their first investment?
From an investment perspective, I think the simplest product is SIP. Because one, it's easy on the pocket also for somebody who's starting new, may not have too much of capital. Technically, you can start a SIP with as low as 100 rupees per month.
Yeah.
But obviously, one should not just start with 100.
Correct.
They should ideally do with as much as they can.
Right.
But I think SIP works wonderfully well. And just to give you a perspective to this, if somebody is say 25 years old or 30 years old, does a SIP of 10,000 every month, and assuming that the investment continues for 30 years, and that this investment generates a 12% return, at the end of 30 years, you have close to 3.5 crores with you.
Right, exactly.
I think that's a huge amount. But again, critical is to start ASAP.
Absolutely.
Yeah.
No, that's a very good point. And you mentioned 100 rupee funds. In fact, I recently saw 10 rupee funds.
Yeah.
Right. So there's no reason why someone should not get started
Correct.
in the current day and age. Also, you talked about SIP as being an amazing product, right?
Yes.
So for the sake of our audience, could you sort of explain to them the difference between an SIP and a lump sum investments? And in what situation is each of those suitable according to you?
Okay. So SIP is systematic investment plan. So essentially, it's like building a tower, you know. So you put the foundation, and irrespective of whether it's a 4-story or a 40-story, you build it slab by slab these days. You used to do it brick by brick earlier, but now it's slab by slab. But essentially, it is one step at a time. That's what SIP typically stands for.
Right.
So you are able to invest small doses of money into the markets on a regular basis. That's critical. Lump sum on the other hand is you put a big amount at one shot, maybe a 50,000 or the 5 lakh rupees just at one shot.
Right.
My personal suggestion is always to do a SIP.
Yeah.
So SIP works best because it has been tested over so many years, and it sort of gives you that power of compounding, and importantly, the averaging of the cost, because your money gets invested at different market cycles.
Right.
So essentially, get the units at a much lower price as compared to when you were to invest in a lump sum.
Lump sum.
Now, the challenge with lump sum is timing is very critical.
Agreed.
And one can never be sure that this is the best time to enter.
Yeah.
Especially in today's time when markets are already at a peak level.
Yes.
A lump sum becomes all the more riskier. Okay. My personal suggestion again is, so SIP is good. I say SIP top up is better.
Right.
So SIP top up is where you, as your income increases, you can add more to the SIPs, and you can again make it automated.
Absolutely.
Maybe with a percentage amount, or maybe a fixed amount, which can go every year as additional SIPs. So SIP is good. SIP top up is better.
Is the best.
The best is SIP top up plus lump sum.
Right.
But the challenge with lump sum is, when do I enter?
When do you enter?
So the best way to get started is do a SIP. You will get enough opportunities in the market when markets would have corrected.
Absolutely.
If you have got a reasonable chunk available with you, do a lump sum at that point in time.
Right.
So essentially, this is what is the best combination over a period of time.
Right. And I totally agree with what you're saying, right? And we explain this concept of SIP to our young investors.
Yeah.
So we basically tell them that there are two essential market forces that you need to know of, right? One force is human emotions.
Yeah.
With the forces of demand and supply, and they're very volatile.
Right.
They're affected by every news article that comes
Correct.
out, right? That's why you see the volatility in the short term. And the second more important factor rather, is the overall productivity growth in the economy.
Correct.
Which is the actual value creation, actual increase in revenues and profits of these companies. And that is the only thing you should worry about. So SIPs basically help you average out the human emotions.
Absolutely.
And tag on to the productivity growth, right? So I think totally agree with the approach that you suggested, and I think it works really well for all investors. Now, you also talked about the market timing piece with lump sum investments.
Yes.
Right. So tell me again, as a youngster right out of college, what are some of the signals that I can look at to determine whether the markets are right now overvalued or undervalued, to determine the entry point?
So there are a lot of these parameters that are typically used. One of them is price to earning.
Yeah.
So typically people say that if it's in the range of 24 and above, I think it's very expensive. Is when you cut down on equities.
Right.
If it comes below, say 16, is a good time to do a lump sum investments. It's undervalued situation. But things have changed, Utkarsh. It's very difficult these days to sort of say that, okay, because that's only one indicator. There are many other factors, as you rightly put, which are at play in the marketplace.
Yeah.
And therefore, it's going to be very difficult to time it.
Right.
And studies have suggested that nobody has been able to do that.
Absolutely.
Right? So the quick formula perhaps could be that every meaningful correction, and when I say meaningful correction, could be a 5% kind of correction, is a good time to start deploying some funds, as a lump sum.
Right. Right. And that makes complete sense. And I totally agree with you that, and one thing on the PE ratios, I think most people now understand PE ratios from the perspective of individual stocks.
Yeah.
But interestingly, we can look at PE ratios at an industry level,
Correct.
at an index level,
Yes.
or even the broad market levels, right? So I think that is one thing that all of you could look into, which has been what has been the average PE ratios for a given industry or even the markets in general. But also, you rightly pointed out, it's the what is the right value is changing over time.
Correct.
With the growth also escalating, it's a very dynamic environment. So one strategy that works really well, as you said, what we recommend is you put some money into a bond-based fund, like a short-term, safer bond-based fund, which is you're ready to deploy capital.
Correct.
Every meaningful market correction, as you said, 5 to 10%, you could take out a certain percentage and deploy it into your equity funds. Right. So I think this is a great strategy for most young people, or I think most people, in fact.
Absolutely. In fact, just to add, because, and that is where it helps, fintechs play a very important role here, because manually, Utkarsh, for me as an individual, it is very difficult because I don't have the time to look at the markets every day. And even if I were to do, I have to sit and calculate 5% gira ki nahi gira.
Correct.
I think that's where your kind of system comes into play, where it's automated.
Yeah.
There could be a trigger that say that the moment it falls, there's a communication that gets rolled out to the investor.
Absolutely.
If they're okay, there's a link also that goes. And if they're okay, they quickly just press the button and that gets invested.
Precisely.
I think this is where fintechs, and these platforms play a very important role, especially advisory kind of platforms, play a very important role. Yeah.
Right, and you made a very, very valid point, right? Exactly. I think automation can help all of us especially because here we want to take away the emotions
Yes.
out of that decision making. You're making decisions purely based on data
Correct.
as opposed to emotions. So very, very good point. I'm glad you touched upon that. Another thing for people just starting off with investments, something that feels very daunting to them with the vast number of assets available. There are equity funds, bond funds, gold funds, there's property funds, and other asset classes available. So when it comes to your overall portfolio asset allocation, how do you think people should look at it?
Okay, very important question, Utkarsh, again, because people talk of asset allocation, but again, my experience of having interacted with a lot of investors, 98% don't do it.
Right.
Okay, they know what it is, but they don't do it. So, just for the sake of the benefit of all the investors, asset allocation is essentially dividing your investments into various asset classes, and as you rightly mentioned, the host of assets that are nowadays available.
Right.
Factors that are important to be considered is one, what is your risk appetite? And again, this is a place where a lot of investors fail because while there are templates available, there are questionnaires available to figure out what is your risk appetite. People generally don't do that. But I think that's the starting point. Figure out what is your risk appetite, and that's done through a risk profiler. It's a very simple questionnaire. Just address those questions. There's a score, and based on the score, you are designated as a category of investor, maybe aggressive, moderate, or conservative. To look at what are your financial goals and when are they due.
Right.
And then you sort of have all of these mix put together. So the longer the time frame, and if you are an aggressive investor, it gives you the indication that you can go long in terms of higher exposure to equities. But the important point is whether you're conservative, whether you're moderate or aggressive, it's important to have a mix of these asset classes.
Right.
And I generally say that it's a thali system.
Right.
You go to any part of the country today, every region, location has their own thali systems in place. And the concept of thali is so beautiful that it is essentially give you all the nutrients, right, which is required for the body. And that's what asset allocation also does.
I love this example, by the way.
So now, for example, if you're wanting to build up muscles, obviously you will increase the protein component, right? Similar to an aggressive guy, equity component goes up. On the other hand, if you're the normal guy, you are not looking at gymming, not building up muscles. You have a mix of everything, so that's a moderate kind of customer. You have equity, debt, both of them in almost similar proportion.
Right.
But important is, again, at least from my perspective, I say that for most investors, there are three asset classes they can definitely participate. One is equity, the other is debt, and third is commodities. And generally by commodities, we mean gold and silver.
Right.
I think this should definitely be a part of the portfolio. Now, what makes what proportion? I think that's where platforms you can help them because you would have this profile which is there, and immediately there's an automated report which says that, hey, you are this category, and therefore this is your right mix of asset allocation.
Absolutely. And I love this example that you use, by the way, of the thali system. I think that's pretty amazing.
Yes.
And that's another example that we can use to explain to people the importance of a risk profiling.
Correct.
Like imagine someone that wants to lose weight and they are on a diet where they are cutting out calories. Someone that's wanting to gain weight, if they're on the same diet, then it's not going to work for them.
Yes, absolutely.
So I see a lot of people just copying their friends or their family's portfolio, but that's not the right approach.
Absolutely.
Right? So that is where I think every single person should go and do their risk profiling. So guys, do log on to cashvisory.com, do the risk profiling questionnaire for yourself, because it's important for you to understand what your asset allocation mix should be. Right now, again, you also talked about the fact that equities plus bonds plus commodities, where gold and silver comes in. Totally agree with that as well. Equities help you sort of make money, beat inflation comfortably. Bonds bring that consistency and stability to your portfolio. And gold is the hedge. Right? When equities don't do well, gold will do well at that time. So I think that's an amazing one, and I think in different proportions, it's something that most people can implement for them. Right? Let's go slightly deeper into the asset allocation side, right? Because there are various types of asset allocation. There is strategic, there's tactical, there's dynamic. Again, we're getting a bit technical here, guys, but bear with us. So according to you, what do you think is the best asset allocation strategy?
For wealth creation, I would say strategic works out very well, where you sort of allocate a fixed percentage. So for example, I've got equity as 60%, maybe debt could be 25%, and the balance could be gold. And essentially you ensure that you maintain the same mix, throughout the journey. Tactical, I think it's a more short-term play.
Yeah.
Where this is good for people who understand the nuances of the market.
Agreed.
They understand the cycles. They understand how different assets perform in different cycles.
Right.
So, for example, gold. We have seen that over the last couple of months has been rallying tremendously. So, if somebody was a nuanced investor, understands what it is, he might have taken a tactical allocation and increased the gold component in this portfolio.
Right.
And as that cycle plays out, then he exits and moves into the next asset which would perhaps be expected to do well.
Right.
So both of them can do well, but from a general investor perspective, I think strategic works out very well.
Right.
Tactical for maybe HNIs, people who understand the market,
Right.
are willing to take those bets. Please
Agreed.
understand the tactical allocation can sometimes go wrong.
Yes.
Your call on assets could go wrong, and therefore it's important that you understand what are the risks associated with those allocations.
Right.
Dynamic again is a wonderful tool, especially for youngsters and people who are wanting to get into mutual funds or equities for the first time. And they don't understand the market. So for example, we asked price to earning ratio today. So the story is that the markets are expensive, but from a forward-looking PE, we feel that it's still rational.
Yeah.
Right. So वो डर है कि मैं अभी क्या करूँ?
Correct.
So the best way to try it would use a BAF kind of a product, which is a balanced advantage fund. It's a dynamic asset allocation where the fund manager does it on behalf of the investor.
Absolutely.
So it's a good entry point. And as you sort of take your journey over the next 2 to 3 years, you understand how it works, you can then get into more diversified products.
Agreed. And everything that you're saying I totally relate to as well. Because again, with sort of tactical asset allocation, a bit of market timing comes into the play, right?
Yes.
So that's where you need to have advanced knowledge. You need to follow the markets very intently and closely for you to have success there. In fact, what we recommend to most of our investors is again strategic, right? And within strategic, we do what we call automatic fund rebalancing.
Okay.
Right? Which is, let's say equities have had a phenomenal rally.
Right.
And your initial allocation in equities was, let's say, 60, but now it's become 70. So what happens is automatically that 10% will get sold off and distributed among your gold and bond.
Correct.
Right? So you're selling that particular asset at its high and buying into the other assets while it's low. Also a bit of trimming the hedges, right?
Yeah,
so you're booking some of your profits as well. So I think this could be
again, from your perspective, fintechs and platforms like you can do that.
Yeah.
Again, the reason why I said asset allocation, people know but they don't do it. They don't do it is of this reason, because again, there's a lot of complications involved, in terms of while it might look operationally very simple,
right,
that मेरे को इधर से exit करना है वहाँ जाना है, but उसको करने में time लगता है,
बिल्कुल,
right, and timing again becomes important.
Right.
So operationally and from a execution perspective, I think platforms like you can really help people actually practice asset allocation,
right,
especially tactical or maybe even strategic. As you said, profit booking happens, you then automatically reallocate.
Right, and that makes complete sense. And we've been talking about a lot of strategies that I think a lot of fresh investors and young people will see a lot of value in, right? But I think you were talking about how you missed the bull run from 2004 to 2007. Now I can relate that to my own journey because I was an engineering graduate, didn't know anything about finance. First 3 years of my career, I left my money sit in the bank.
Okay.
So this was around 2014 to 2017, right? Again, I missed a crazy bull run at that time. That's one of my biggest regrets, right? So now that you've been in the markets, seen so many cycles over the years, what is it that you do as a more advanced investor with your portfolio? Like some of the strategies that have worked for you and are time tested.
Okay. Unfortunately, in our setup, we don't take exposure to stocks. We are not allowed to take exposure to stocks. There's a regulatory requirement there. So my portfolio from an equity is more into everything is into mutual funds.
Right.
I do PPF as part of the debt.
Of course.
That's something that I religiously do on 1st of April.
Nice.
Of every financial year. Then of course gold. So I've done gold ETF.
Right.
Because I think that's one of the easiest way of buying gold instead of buying physical gold. Not that we don't buy. Wife बहुत pressurize करती है तो लेना पड़ता है वो भी. But ETF works on automate, तो SIP लगा देते हैं तो it keeps going there.
Right.
And of course real estate, something which I've done in the past. So no fresh investments in real estate, but I think perhaps one of the regrets could be real estate in my case because capital appreciation has not been that great.
Right.
Again, if I would have put that money in a mutual fund or stocks, I think things would have been very different. But I think the learning is that it's important to look at various asset classes again. Be careful, especially with real estate, because it has its own cycles, and some of these cycles can be they generally come after the long period of time.
Yeah.
So, for example, we are now seeing the real estate boom again happening
Yeah.
after the prolonged sort of, if I can use the word, recessionary phase, where nothing happened materially. So I think it's important to be careful, and therefore my advice to most investors is stick to equity, debt, gold. I think this is something that everybody can buy.
Right.
Real estate again has a huge capital to be invested.
Exactly.
Yeah.
Precisely. No, and that's a very important point that you mentioned. I think that's a bit of shift that we are seeing in the investment philosophy in the current generation as well, where people are moving away from fixed deposits and LICs and property as their primary investments, which I think is critical, right?
Absolutely.
And we also talked about the point in one of our recent podcasts that it's actually riskier to buy a property because all your money is in one basket, right?
Yes.
So don't put your eggs in one basket, guys. Diversify. And also, one point that I want to take away from your portfolio is that, guys, there's no right or wrong answer, right? It's always a mix of assets that works well over time.
Correct.
Some might not do as well. Some might do better. But you'll only know that after the fact. Right, so spread it around across these various assets and maintain the allocation. Keep updating them over time.
That's actually the reason to do asset allocation. Please remember, asset allocation, the objective is not to maximize the profits.
Correct.
It is to sort of cut down on the losses.
So
something will do. It's like a cricket match. You have a team of 11 players. And you expect that अगर बैटिंग ने अच्छा नहीं किया तो बॉलिंग आपको बचा देगा. So that's the same concept we apply here, that one of the asset class will protect you from a severe downfall. I think that's the objective, and that also brings us to an important discussion that when you mix assets, a lot of people say मेरे पास large cap, mid cap, small cap है तो मैंने asset allocation कर दिया.
Right.
It's not. You have just diversified.
Exactly.
So when you mix assets, it's important to have assets which work in opposite directions. So equity and debt generally tend to go in opposite direction.
Yeah.
And as you rightly put, gold, especially when there's an uncertain environment, tends to go up. So having all of them sort of balances your portfolio.
Absolutely. And the concept of correlation, right? So you need assets which are negatively correlated so that, your portfolio is able to withstand those shocks, as we say, which is, I think, great advice for every single young investor. And I think so far we've had a phenomenal discussion, Hari, but we're getting into a very interesting segment now.
Okay.
We call it Rapid Fire, not named after any show, I promise you. But let's get right into it.
Sure.
So mutual funds or ETFs?
If you're saying mutual fund active, is your question?
So actively, let's rephrase it as actively managed funds or passively managed funds.
Again, I would say both. Again, very important. So we have what is called as a core and a satellite approach in portfolio management. So one could have a 70-80% into actively managed funds and about 10, 20, 30% into the ETF kind of funds. So active and passive both can go together.
Agreed. Totally agreed. Early bird or night owl?
Because of where I stay and where my office is, it has to be an early bird. You know what the situation in Mumbai is very similar to the Bangalore traffic.
Right. That makes sense. If you were to be a mutual fund, which fund would you be?
That's an interesting one. So I generally like to simplify a lot of stuff, de-jargonize complex terms.
Right.
So from that perspective, I would want to associate myself with an index fund. Simple product.
Right.
Fund managers just replicates the index.
Right.
Low cost, fully transparent.
Right. Sasta aur tikau.
Yes.
Amazing. Speaking or writing?
Speaking is my profession. Writing, I like to do, especially when I've got free time. And traveling gives me a lot of opportunity to think of ideas and concepts, because 2 hours of journey, gives you a lot to see around, think, and then write. I think both of them, but one is profession, one is maybe a hobby kind of.
Right. Amazing. I think you've covered this, but again, just to reiterate, best first investment for young people?
SIP.
Right. Best financial advice in one sentence?
One sentence, okay. So it sort of reminds me of one of the movies, Mohabbatein. And if you recollect, there's a dialogue, the Gurukul system, we got Pratishta, Anushasan,
yes,
and Parampada. So Parampada, Pratishta and Anushasan, ye is Gurukul ke 3 stambh hai.
Right.
So similarly, from a wealth creation perspective, I think starting early, discipline and thinking long term.
Right.
Are the 3 stumps for wealth creation.
That's an amazing one. If mutual funds had a sense of humor, what jokes would they tell? This is a difficult one.
It's a difficult one, Utkarsh, but let me just think about it. Um, I generally use a lot of humor in my sessions,
Yeah.
So let me ask this question to you that as
Sure.
part of the joke. Tell me, Utkarsh, why did the index fund break away from the mutual funds?
Right. Because let's see. Why did it break away from
Yeah.
the mutual funds? Okay. Uh, because it was not being managed.
Okay,
Just taking a guess.
because it wanted to outperform.
Outperform. Got it. Nice.
Let me ask one more.
Sure.
Why has the mutual fund become so popular?
Right. Because mutual funds are here.
Mutual funds, yeah, I was expecting this
Yep.
because it generated a lot of capital gains.
Capital gains. Okay. Nice. Okay. The next one is beaches or mountains.
Beaches.
Okay. Okay. What is the silliest misconception that people have with regards to investing in mutual funds and stocks?
I think even today when we do these investor awareness programs, one of the questions that keeps coming is mutual fund to satta hai.
Right.
And my father also used to tell me equity stock market satta hai. So I
Right.
think this is some of the concepts, misconception that people have. So when you do investments, these are not sattas.
Yeah,
Okay, you are
absolutely.
basically taking a very calculated risk and an approach towards a business.
Right. There's a method to the madness. And your favorite Indian city?
Has to be Mumbai.
Right. Of course. Amazing. So I think this was absolutely fantastic, Hari. Pleasure chatting with you.
Same here.
Thank you everyone for joining us today, and do keep coming back and join us for our future episodes. If you found value in this episode, learn something new, don't forget to like, subscribe, and share it with someone that this may benefit. Amazing, Hari. Thank you
Thank you
again.
so much. Thank you.
Pleasure.